Good evening, students. This is the sum which I have given on realization account. The sum, if you will read, goes like this. Prepare realization account, partners capital account, cash account and partners loan account. Sumit and Arijit were partners sharing profit in the ratio 2:1. Their balance sheet as at 31st March 2025 is given. The balance sheet reads like this. Capital of Sumit and Arijit is 1,50,000 and 2 lakhs. Whereas building, equipment, stock, sundry debtors, less provision 2,000, 48,000, investment 50,000, cash at bank 10,000, preliminary expenses 12,000. This is the asset side, 2,40,000. In this side, we have general reserve, employees provident fund, workman compensation fund, IFF, Sumit's loan account, which was the partner's loan account, credit balance, Arijit's wife's loan account, means the third party, and creditors is given. The firm was dissolved on 1st April 2025. And assets and liabilities were settled as follows. Let's see what are the assets and liabilities settled with. Building was realized at 3,20,000, equipment at 12,000 and stock at 90,000. Moreover, workers' claim for compensation of 9,000 were paid. For that, this fund. Debtors were collected in full and debt recovery agency charged 2,500, bad debts recovered 5,000, outstanding interest on Sumit's loan 3,000. Sumit took over 60% investment at 20% discount. So this is the whole sum altogether. I am not reading the sum. You will pause the video and read it. We will start doing the sum. In the sum, we will see that we have to prepare realization account, partners capital account, cash account and partners loan account. I am showing you the realization account. We know what is a realization account, a nominal account, where we record all the assets and liabilities. We close all the assets and liabilities over here. All the assets and liabilities indicate, excepting which one? Excepting the capital account, excepting the cash in hand, because we will be preparing separate account for capital and cash in hand. We will prepare cash account. If there is a bank account, we will prepare the bank account or cash account, whatever may be. Let's start with this sum. Realization account we are preparing. So realization account, over here we have particulars amount, and now in the realization account we will close all the assets. All the assets and liabilities are closed like this, no? They crisscross each other. Like this building. Building value 3 lakhs. We are closing it over here. 3 lakhs. Equipment 30,000. We are closing. Stock 1,20,000. We are closing. See, all these are debit balance. To close them, realization account debit 2 building. Realization account debit 2 equipment, which we are crediting them. We are crediting these particulars, these items in the realization account. Means realization account is being debited by this all. That means we are debiting realization account but crediting these individuals' asset accounts. Debtors. Debtors have 2 values if you will notice. 50,000 and provision 2,000. We will take the gross value. 50,000. Investment 50,000 again. We have closed almost each and every item. You will say, sir, why we have not closed cash at bank and preliminary expenses? Cash at bank and preliminary expenses we will close in separate places. Cash at bank we will close by opening bank account, and preliminary expenses we will close in capital account. We will divide these preliminary expenses or profit and loss debit balance to the partners in their old ratio in the capital account. That I will show. Let's see the liability side. Liability side we have capital account and of Sumit and this one, Arijit. So I am showing the capital account by balance brought down Sumit and Arijit. Sumit's capital is 1,50,000 and Arijit's capital is 2 lakhs. Then we have general reserve. No adjustment on general reserve. We will just close it. General reserve, as we do in admission, retirement and death, we distribute the general reserve if nothing is mentioned. We are distributing it over here also in the ratio 2:1 because that is the old ratio. General reserve 60,000 divided in the ratio 2:1 is 40,000 and 20,000. What else we will distribute? Workman compensation fund investment. They have some adjustment. That's why I will be coming to it little later. This side, preliminary expenses we will distribute to preliminary expense. This is a fictitious asset which is not closed in realization account. This is closed in capital account only in the ratio 2:1. 12,000 in the ratio 2:1 will be 8,000 and 4,000. Now come to the liability side's other item. We have written all the asset side items: building, equipment, stock, debtors, investment. This one we will be writing in the bank account which I will open. I will write 2 balance brought down, and preliminary expenses also we have written in the capital account. Now come to the liability side. We have already recorded the capital. We have recorded the general reserve in the capital account. Employees Provident Fund is not out of profit. It is just a claim of the employee. It's a third party claim. It's a simple liability. We will close it as we close creditors. We are closing it by Employees Provident Fund. How much is the amount? 40,000. Then there is Workman Compensation Fund. There is an adjustment in Workman Compensation Fund. I will show it little later. Investment Fluctuation Fund we will close. Just investment we have closed. Investment Fluctuation Fund also we will close. That is not free reserve. Not free reserve. Free reserve or general reserve we have distributed among the partners in their old ratio. Then Sumit's loan. We have to open Sumit's loan account and we have to show over there by balance brought down Sumit's loan account. Again I repeat, for this Sumit's loan account, I have to open a separate account, loan account for the partner. Over there I will write by balance brought down because it's a liability. For Arijit's wife's loan account, it's a simple expense. We will record it over here. Arijit's wife's loan account. It's a simple liability. We are closing it over here. Creditors 45,000. We will close that also. So see, we have closed this, we have closed this, we have to open an account for this. Fluctuation fund we have closed, Workman Compensation Fund has some adjustments, we will come to it. Employees Provident Fund we have closed, general reserve and capital account, we have closed them in the capital account. Now, we will read the, before we read the adjustment, this provision for doubtful debts is a liability. Provision for doubtful debts is a liability. And in this liability, we are closing this liability in the realization account. How much is the provision? 2,000. So we close it that one also. Now this less in the asset side means liability, credit balance. To close any credit balance, we debit it. Provision for doubtful debts to realization. All the credit balance we have closed in this side, and all the asset balance we close this side. Now closing, I will explain one more easy way. To close any asset, we are not writing in the asset side. And see the balance sheet, asset side is the right hand side. We are closing them and bringing them in the left hand side. Liabilities are there in the credit side and we are closing it in the debits in the other side, credit side. Now next one we will be seeing now that how to do all these adjustments.
अब कट करें, कट क्या दिखा?
how to do all these adjustments. Building was realized at 3,20,000, equipments at 12,000, and stock at 90,000. Stock at 90,000. Realized means money has come. So when money has come, we will write where? Over here, money comes, then what the journal entry? Cash account debit to asset, but asset is already closed. So we will write bank account or cash account debit to realization. So see, in the realization account, we are writing by cash account and building realized. How much? 3,20,000. Equipment realized. How much? 12,000. Stock realized. 90,000. How much whatever is realized that we are writing. Debtors were collected in full and debt recovery agency charged 2,500. Full debtor value was 50,000. The recovery agency charged 2,500 means we have got 47,500. 50,000 minus 2,500. So from debtors we are getting 47,500. Bad debts recovered is given. See over there. Point number 4. Bad debts recovered 5,000. So we got money again. So cash to realization. Bad debts recovered. For unrecorded asset, how much we have recorded? See, there was an unrecorded asset of 6,000. There is an unrecorded asset of 6,000, which was sold for 4,800. We don't have to record anything because the business is closed. How much we have sold, how much the unrecorded asset has been sold, and what price we are getting, what amount we are getting, that only will be the entry. Our simple journal entry would have been cash account debit to unrecorded asset. But instead of that, we are passing cash account debit to realization, because we cannot open any more nominal account or asset account because the business is no more in existence. We are only asked to prepare, or we are only forced to prepare realization account, capital account and cash account. So everything will be closed through realization account. This unrecorded asset also, we are getting the money, cash account debit to unrecorded asset, but we cannot write unrecorded asset, but we are writing to realization. So in the realization account, by cash, unrecorded asset, how much? We have realized 4,800. We will add all these things and we will be writing it over here. Next is what? Next is, let's see the other adjustment. Workers' claim. Yeah, this adjustment I was talking about. This adjustment. Workers' claim for compensation of rupees 9,000 paid. Now when we are paying the worker, when we are paying workers' claim, this 9,000 we are paying him. Now you notice, students, there was a fund of 15,000. We have made a claim. The claim is paid of 9,000. Out of this fund only this claim is paid. That means 9,000 is used to pay this claim. 6,000, that means 15,000 minus 9,000. 6,000 becomes the free reserve. Free reserve of this 6,000 will be shown in the capital account. Just like general reserve, we have divided 60,000. Workman compensation funds 6,000. 15 minus 9. 6,000 will be closed in capital account by WCF. 6,000 closed, so 4,000 and 2,000. Now remaining 9,000, we need to close them over here. That's the WCF 9,000. If you will notice, WCF is closed by 15,000 only. We are debiting WCF by 15,000. 9,000 over here and 6,000 in the capital. 9 plus 6, 15,000. We have to debit it. Why? Because WCF is 15,000 credit. Any credit, we have to equally amount, we have to debit it. So we see that it is debited. Now we have done them. Which one is left? Then let's see. Building we have done first adjustment. Equipment, stock, workman's compensation we have done. Debtors collected done. Bad debts recovered done. So, there was an unrecorded asset we have done. Now we are doing number 6. What is it in? Sumit took over 60% investment at 20% discount. Now there is some workings to be shown. 60% of investment. What is the value of investment? Value of investment was 50,000. What is the 60% of 50,000? 50% is 25,000. 60% means 60 by 100. I am showing it over here. 60 by 100 into 50,000. That is 30,000 is the 60%. Yes, 30,000. This 30,000, Sumit took over 60% investment at 20% discount. This 30,000 value he is taking at 20% discount. That means he is getting 6,000 less. 30,000 investment he is taking only at 24,000. When he is taking the investment, that means investment is taken over by Sumit. So we are writing by Sumit's capital, because this is not realized in cash. Whoever partner takes, my journal entry becomes capital to realization. Sumit is taking the Sumit's capital to invest. Sumit's capital to realization. It is how much? 24,000. He is taking at 24,000. Now if you have written Sumit's capital, then in the capital account also I will write to realization. In the Sumit's column, 24,000, because journal entry says so. Capital account debit to realization. Capital account, this is capital account to realization. And in realization, we have written by capital. Sumit. So this adjustment, first part is done. And the remaining investment was sold at 25% loss. How much is the remaining investment? 30,000 investment we have used. 20,000 is the remaining. That 20,000 investment we are selling it off. Not at 20,000, but we are selling it off at 25% discount. Now 25% discount means what? We have sold at lesser price. 25% of 20,000 is, yes, 5,000. 25 by 100 into 20,000, 5,000. So we are realizing from that 20,000 investment only 15,000. So when we realize, we are getting cash. So we are realizing investment. I have to write it over here. I have not written earlier. So investment realized. Investment at 15,000. So one more item has come up. 15,000 investment realized. 15,000. You all have understand how 15,000 came? 20,000 was left out. 50 minus 30. 40% of the investment was there. That is 20,000. We have made 25% loss. So that means 5,000 gone again. 15,000 is the value of investment which we have realized. That I have written in cash. This. Now next adjustment. Arjit agreed to pay his wife's loan together with outstanding interest of 1,500. So Arjit agreed to pay his wife's loan together with outstanding interest of 1,500. Now this is Arijit's wife's loan. Who is paying? It has been paid by Arijit. So Arijit's capital account, Arijit's wife's loan together with interest. I am writing the interest over here only. He is paying 21,500. Arijit's capital, Arijit has taken the wife's loan at 21,500 along with the interest of 1,500. You don't have to pass any interest entry, nothing, because business is closed. Everything is realization. Realization to Arijit's capital because he is paying that amount. At 1,500 you will treat it as an unrecorded liability which has been paid by Arijit. Arijit's capital, that's why debited. Now the last one. Realization expenses including payment made to recovery agency were 5,300 paid by the firm. You all remember who bears it and who pays it. Nothing is mentioned, means firm is only bearing, firm is only paying. When firm bears, then realization account debit. Firm pays, then to cash. So we are writing realization account debit to cash realization expenses. How much is the realization expense? It is written 5,300. But 2,500 already we have deducted while we were getting this amount, debtors. 50 minus 2,500, 50,000 minus 2,500. So 2,500 I will not write again because already that adjustment is done. So 5,300 minus 2,500 is 2,800 is what is the realization expenses which we are paying now. Next is one more adjustment is left out. this adjustment. Outstanding interest on Sumit's loan, rupees 3,000. Sumit's loan was there. We have to open Sumit's loan account. I have not shown the loan account. I have to show cash account and loan account needs to be shown. So when we are paying the interest to Sumit for his loan, the journal entry is interest on Sumit's loan to Sumit's loan. Again I say interest to loan. Interest to loan. Now interest account we can't open. What we will use then? Realization to loan. So in the realization to loan, to Sumit's loan. How much amount? 3,000. Outstanding interest 3,000. So we are writing 3,000 over here as well. Now you all remember, we have already done all the adjustments. The last part is left to check out. Is there any unrecorded asset or unrecorded liability left out or not? We have already dealt with building, equipment, stock, debtors, provision, investment, cash at bank we have to open, purely expenses we have done. Provision for doubtful debts is a liability, but no one is paid for that. That's why we have just closed it. Now come to the liability side. Capital already we have shown, general reserve shown, provident fund. We need to make the payment to provident fund. It is 40,000, we closed it. We need to make the payment whether written or not to the workers. Workmen compensation fund already we dealt. Fund, investment protection fund we dealt. Sumit's loan we have to open an account. Arijit's wife's loan we have already dealt with, closed and paid 21,500. And these creditors, this also needs to be paid 45,000. Yes, dear students. So this is the way by which you will be doing this sum. 2,800 was this. All of this you will add right over here. Then this all you will add and right over here. This all up to this you will add and right over here. You will get a balancing figure. You will add this up. I am not adding it. You will add. You will subtract this all. You will get a balancing figure over here. I think the answer is 24,000. I don't remember. The answer is 27,000, I suppose. 27,000. Then in the ratio 2:1, 18 and 9. I have written the answer. You will just add this one, add this one. You will see that 27,000 will come. Hope you all have understand. I have not shown the cash account and loan account. I am just saying you. In Sumit's loan account, you will write by balance brought down. This is the Sumit's loan, 30,000. And by realization, the interest part. That was 1,000. That was 3,000. So 33,000. You need to make the payment to Sumit. That time you will write to cash in Sumit's loan account, 33,000. Sumit's loan account will be closed. After that, after everything, you close the bank account. How will you close? You have already written to balance brought down. 10,000. Then you will just see over here where cash is written. This word. This cash. This cash means what? Realization to cash. So in the cash account you will write to realization. All these items you have to write again. And over here, this cash you will write in the cash account credit side. It is what? Realization to cash. So in the cash account by realization. This whole 4 items you will write over there. And your cash balance will match. Hope you have understand. This capital account will go over here as to realization, 18,000 and 9,000. Even this Sumit's loan already written. Arijit's capital I have not written, I am writing it. Realization 21,500. That's all. We will now close the capital account. The balancing figure of capital account will be to cash or by cash. I suppose to cash means they will be taking away the cash. Both the partners will take away the cash. This will also be closed in the cash account. You will see that your cash account will match after writing these figures. And all the cash figures, even from the loan account at 33,000, your cash account will match. Thank you students. Hope you all have understand. If you have any problem, any doubt after doing this sum, please come and discuss. Give me a comment we will discuss on it. Thank you, students. Thank you very much.